Hello, everybody. Well, I genuinely hate to announce that I have nothing to talk about and then prove it to you, but I'm a little bit feeling that way, and let me explain why. It's very hard to discuss this market. I feel like it'd be the equivalent of hosting a show back in 1950s Russia about the crop production, because it's just all so controlled and predictable and boring. It's kind of hard to make entertainment out of it. And I'm feeling this way in particular because think about where we were last Friday. I'm recording this on Friday evening, and I recorded my other quartet of videos last Friday evening, and this bar is what closed the week out. What we had gotten is pretty much across the board a beautiful topping pattern, a tease of a breakdown on Thursday, and a no questions asked tumble on Friday. And my view was that, well, we'll probably bounce when the week begins, and then we can resume the fall. Well, we got a bounce all right, but it didn't stop at all. It bounced on Monday pretty much where it should have stopped, and it didn't do much of anything Tuesday, didn't do much of anything on Wednesday, and then just went up and up again. So it's just puke. It's how can you read something like this? Because that's why I'm so just infatuated and keep yammering on about crypto, because it behaves itself, because it's a market, and I'm not going to go off on some crypto tangent here too hard, but virtually every wiggle that I've anticipated in the whole crypto space has panned out beautifully. I mean, right down to, you just look at this simple trend line here, which is very old. It's not like I moved it after the fact. This is an old trend line, anchored. The most recent anchor point is back here, over a month ago. And if you look how it behaved, broke it, resistance, 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 resistance. It's a beautiful thing. But I'm really not a crypto trader, not much at least. And it's exasperating. And so when there's so little to talk about, I fall back on the old standby of ETFs, because these give us a nice general view, something to talk about. And I've got a standard list of 40 ETFs that I follow. And I'm going to do these 4 videos 10 at a time. I've spent 3 minutes just kind of bitching here at the beginning here, but that's usually how these things go. I just have a little introduction. But we'll just do 4 videos, 10 each. I don't think there's going to be a heck of a lot of other content besides that, because, listen, there's only so much blood I can get out of this stone. And I'm already dreading next weekend, which is a 3-day weekend. But that's my problem, not yours, right? So anyway, let's bang through these ETFs, and I'll just go through these in alphabetical order. In some instances, I will have nothing to say about them, and in others, it'll be a little more fruitful. So, alphabetically, starting at the tippity top, which is DBC, the commodities. This ETF is comprised of a lot of commodities, the biggest of which is oil. And it's a pretty clean chart, actually, because we had been in a steady uptrend ever since October 29. Pretty much the Halloween rally commenced across oil and all commodities, and that was completely intact until here on the 16th of June, where it just went completely springboarding over the trend line and has stayed there beneath ever since. It's been very clean, like so. And that may indicate a forthcoming change in direction, because we do have a broken trend. And incidentally, nothing to do with DBC, but I will say that the brightest hope for the bears, of course, was Gartman finally appeared on the scene after being quiet for a year and a half, and came out bullish on the stock market. So maybe a nuclear war Sunday. I don't know. The diamonds. This is also still a pretty cool, pretty clean pattern. We have a clearly broken wedge here. And since that time, in spite of the huge lift we've seen over the past 6 or 7 days, we still have this downward channel and a series of lower highs. You know, the diamonds had gone down. We had how many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 red bars in a row. And that's where we ended last Friday. And then a giant middle finger to the bears all week long. Up, 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 like so, undoing the majority of that descent. EEM, snooze fest. Boring as can be. From here, it was looking really good. I was looking like a breakdown, but this market is totally fake. And so, with all the intervention going on, I mean, hand to God, people, my hand to God. In a normal market, this would have broken down and gone into a free fall. This is not normal! Exclamation mark. Honest. EFA. Europe. This is kind of like the diamond in the respect that we do have a cleanly broken wedge. And yes, we undid some of the damage in the 5 past trading sessions, but we're still, lower highs and well below the lifetime high. Mexico, don't have anything to say about it. EWZ Brazil, not really much of anything to say. We've been in this 13-year descent, and then more shorter term, we've been in this counter trend rally, but it's just not that interesting in a chart right now. The whole precious metals trio here, and there's my dog barking at, that's my middle dog, by the way, barking at how god-awful this market is. Thank you, Bobby. Miners did squat this week. Look at this. Total and absolute boredom. It's like a 4 penny range. I had actually gone long GDX calls. Sorry for all the barking, but the house is well guarded. I got out of them toot sweet at a teeny profit just because I got a funny feeling it wasn't working out, and I'm glad I got out because they were very short-term calls. But this has been a complete bore, and it's shocking too because you maybe see the B of A think about hyperinflation on the way. Somebody might want to mention this to gold. Gold is doing diddly. Here's the junior miners again. Whole lot of nothing. Absolute dud. As far as gold itself, here's GLD. Speaking of duds, we've got here 7 days in a row of absolute zilch. Boring. Maybe it'll close the gap at some point. Maybe not. I mean, it's odd. Precious metals seem committed to not participate in anything exciting in this market. Crypto does, equities do, gold, finger right up its nostrils. So there it sits. And the last one of this 10 is unfortunately kind of a snoozer too, but this is HYG, the high yield BlackRock, our darling friends at BlackRock. This, of course, had completely collapsed during COVID, but the government came in, said they would buy directly from BlackRock, and that seemed to make things just right in the world of Larry Fink. So lifetime highs on this one, but essentially this has been monkeying around vis-a-vis this channel since the beginning of time, and it just seems quite copacetic about life here, just kind of sailing along nice and smooth. Anyway, there's 30 more to go, and so I'll continue to crank out these videos. See ya.